If you're a company looking to learn more about Bitcoin or looking to integrate Bitcoin into your corporate strategy, this episode is for you. I'm Mohamed Kortam, and this is the MENA Treasures podcast. Rolf, thank you for being with me today. I'm really excited about the discussion about Bitcoin today. But before we start, let's start with the background for you, an intro, and your brief role at the moment.
Sounds good. Thank you for having me, Hamad. I really appreciate your time today. So, Ralph Gebran, I'm the managing partner of Onramp MENA. We are a Bitcoin-only advisory and consultancy platform. We focus on high net worth individuals, corporations, and institutional investors and family offices. Before Bitcoin, I spent 15 years in traditional finance. So I worked within the institutional asset management space. The last two asset managers I worked for in Canada, combined, they manage 1 trillion in assets under management with basically endowments, pension plans as our client. That's pretty much it.
So before shifting to Bitcoin and being basically a Bitcoin maxi, you had very good exposure to the TradeFi.
Yes, knee deep into it. I mean, when you work in institutional asset management, you're talking about very large portfolios, and we look at risk very differently than the retail crowd. And most of the time, you're not dealing directly with the client, you're dealing with an investment consultant. And these guys are like the most sophisticated when it comes to understanding portfolio management, asset allocation. So it's really difficult to win the clients because the clients aren't sophisticated typically. So the investment consultant steps in to provide the client the most value, which is to make every asset manager beg to win the mandate. So yeah,
I think you're the perfect guy because I tell you what I have seen in the Bitcoin space so far. The most people who are really into Bitcoin have been in some way or another exposed to the TradeFi, have been worked in the TradeFi in investment banking or in banks, or have been studied TradeFi certificates, like for example CFA. So they have been exposed to TradeFi in some source, in some sense or another. That when they get exposed to Bitcoin, they really understand that wow, we have been I'm sad to say that, but we have been fooled in some sense because now they understand how radical Bitcoin is and how different it is from the TradeFi and how it solves a lot of the issues that we are facing the TradeFi at the moment. So, as a beginning, and I know this is the question that might take hours and maybe a whole podcast for to answer, but let's briefly try to define what's Bitcoin for who doesn't know what Bitcoin is, because now we're speaking to treasures, and I would assume not all of them are aware of the definition, the right definition of Bitcoin, and how it can help them. So let's start with the definition of Bitcoin.
Yeah, so that's one of the hardest questions to answer because the way I view Bitcoin is differently defined depending on who you're speaking to. Someone who is living in Lebanon, Argentina, Venezuela, who has an oppressive government, who is censored all the time, and they don't have financial freedom, Bitcoin is a way to hedge their situation. It allows them to move money across borders, allows them also to protect their purchasing power against a hyperinflating currency. So that's one segment of individuals. For individuals in the West or in some of the wealthier GCC countries, Bitcoin is a portfolio asset. But what it is really, generally, it's a decentralized network. That's Bitcoin at the foundational layer. So as a decentralized network, basically what happens is it's a ledger. And it's nothing really innovative. We've had ledgers for millennia right now. But what it does is it distributes that ledger across the world on different computers. And so to destroy that ledger, you need to destroy every copy of that ledger at every
computer.
Exactly. So making it extremely resilient. On top of that network, what incentivizes the security of that network is the currency. So I don't like to call it currency, the asset, money. These are terms we throw around, and some of them are interchangeable, but really it is similar to gold, and gold is defined as money. So we typically say digital gold. And why is it better than gold? Because it improves on some of the properties of gold. So Bitcoin has a limited supply, 21 million, hard cap. To change it is nearly impossible at this stage with so much computers backing up the network. It is borderless, so highly transportable, unlike gold. To move gold from one country to another, it costs millions of dollars and it's extremely difficult. There's a security risk. To store gold is extremely costly as well and operationally heavy. Bitcoin solves a lot of the problems that gold couldn't solve when it came to hard money. And the main properties of that are speed to transact and its borderless nature, and it's almost zero cost to store in comparison to gold. So the way I position Bitcoin to your audience, it's an asset,
Mm.
as simple as that, similar to how you would invest in gold, real estate, or a fixed income instrument. You should view Bitcoin as an asset. It has 16-year track record. It's proven itself at the adoption level, but also at the regulatory level, which is important for treasurers. So right now we've seen accounting rules change in the United States with the introduction of FASB, where now you can hold Bitcoin on your balance sheet as a treasurer and you can market to market
Mm.
rather than just mark it down and then hold a huge drag on your balance sheet and company. So Bitcoin can be viewed in many ways. We can get into the technicalities of how the blockchain works and all that, but really, the blockchain in Bitcoin's case is a means to an end.
Mm.
So people like to say blockchain, 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 but the reality is, in my personal opinion, the only fit for blockchain is the Bitcoin network, and that's just coming from a Bitcoin purist, let's just say.
The blockchain, a technology that has been there for so many years. And the blockchain has various solutions. Bitcoin is one of the solutions or one of the tools in which we use the blockchain. I did have a discussion with one of the very well known treasurers, and I'll put a link to the episode here. But we discussed all the ways or all the solutions that we can use blockchain. But to your point, I think and I do believe that Bitcoin is one of the more prominent solutions out there under the blockchain network. So, as to what you were saying, just to briefly explain to audiences, the blockchain network is a ledger on the network, openly available to anyone who has a PC and has access to this network. So you can view the transactions over the blockchain. Me sending money to Rolf or Rolf sending money to me. It can be money, it can be documents, it can be whatever. And basically, blockchain is one of the things that moves over the, Bitcoin is one of the things that moves over the blockchain that you can view. One of the things that you mentioned and very interesting is comparing Bitcoin to gold.
Mm.
And a lot of people, especially old school, if I'm allowed to call them that, they have hard time comparing Bitcoin to gold because where they say, okay, gold is something physical I can hold. I know I have the money, it's in my hand. Bitcoin is something, how can I catch this? How can I hold this? How can I? And I always like to tell them, okay, but fiat or the currency that you have is not physical.
It's not.
It's digital, but you still consider it as money. So maybe this is something that we can elaborate on, or maybe give your own opinion on that.
Yeah, so the typical argument is Bitcoin has no intrinsic value.
Yeah.
But intrinsic value, in my opinion, is subjective. Water in modern day society has no intrinsic value because you can access it anytime you need. But in the desert, when you haven't had water in 2 days, water now has a lot of intrinsic value, and gold or any type of cash you have has zero intrinsic value because it has no use to you. So really, I think focusing on the intrinsic value is misguided, let's just say. But why is gold difficult to for some people? Why is it difficult to compare Bitcoin to gold? Exactly your point, because they can touch it. And but the reality is, the reason why gold has a certain price point is because of supply and demand dynamics, right? And part of issuing the supply of gold is all the mining that happens to pull gold out of the ground. When the price of gold goes down, they mine less. When the price of gold goes up due to a safe haven status, when the world is kind of in chaos, then there's more gold mining. On average, the supply of gold increases by 1 to 2% every year, and that's why it maintains its value, because it can't be expanded at will. Bitcoin takes that and pushes it to the extreme. There's a pre-programmed increase in the supply of Bitcoin up until the 21 million. So it perfects what gold is trying to do, because the supply increase of Bitcoin decreases over time. So it has a decreasing inflation. Gold has a stable inflation, and that is uncertain. If we land and find a gold deposit somewhere, that adds to the supply of gold, so gold start losing its edge more and more. I don't like to use the analogy, if we mine an asteroid, gold goes to zero, because we're nowhere near that right now, unless Elon Musk has some secret tech that we are not aware of. But
You never know. You never know.
yeah, but
Might happen.
realistically, you never know what kind of developments come along the way. There are a lot of parts of the earth that we haven't explored yet. And I mean, we still haven't even discovered Earth itself. I mean, once digging technology increases, we'll be able to find more gold under the Earth's crust. So there's no certainty that, gold's going to remain at 1 to 2% increase. Fiat, on the other hand, grows at an average 7% on a yearly basis. So meaning the cash you have within 35 years loses half of its purchasing power. The only asset that has a fixed supply, and that over the last 16 years has shown a very strong correlation to the expansion of the money supply, is Bitcoin.
Mm.
What I tell people, and I went through this with my father, because my father's like gold, gold, or real estate, real estate. And then over time, you show him the similarities. One of the hardest things is like, but who controls it? Like, because he's an old banker, and his conversation is like, yeah, but who issues the Bitcoin? I'm like, that's the whole point. No one does. It's pre-programmed, and so no one can come and distort the market with intervention. And over time, when I showed them the similarities, I showed them how to use it. I think you need to see that it is tangible, but you have to use it. Buying it on an exchange and keeping it there, of course, you're going to feel like it's just sitting there. What did I do? But same when you buy a stock, do you hold it in your hand? There is intrinsic value because there's a business that's represented. But if you take Bitcoin and you actually move it, you send it to someone in Lebanon, you send it to someone in Argentina, and they receive it quickly, no friction, at low cost, then you realize there is value.
Mm.
So I think you have to show practical implementations for people to understand, except if they're just interested in the speculative side of things, which is numbers go up. So I'm just going to buy it and hopefully convert it to whatever currency into the future. But most people, in my experience, once they buy it in any form, whether through ETFs or spot Bitcoin, they get curious about it. They follow more the news about it, and over time, they start understanding it more and understand its value. So I've experienced it where I send my parents back home money or my friends back home money. If you go to Western Union, you're going to lose a huge chunk of that. There are, people who would convert your Bitcoin to whatever currency you want almost anywhere in the world.
Mm.
So think of it as your getaway bag. In the past, we used to hide stashes of cash under the mattress or in a safe or gold bars. But really, when there's a crisis and you need to sell your gold, you're going to lose a lot of money.
Mm.
So has it really protected your purchasing power? Whereas Bitcoin is global. You don't have to, you're not stuck to your geographical location to get liquidity. It's 24/7, 365 days a year. It doesn't shut down. It's the most liquid asset. So that's why I think companies, family offices, institutions are looking at it from that point of view. It's a hedge against the system. Gold is based on the system. So even though gold is a commodity, at the end of the day, it is closely tied to the system itself, the U.S. System, because the U.S. dollar is the reserve currency of the world. So if the Federal Reserve changes interest rates, it will reverberate across the globe. It will affect real estate prices in Argentina. And so gold similarly will be affected because these companies are taking on debt in US dollar to go excavate and mine that gold. The only asset that's actually sitting outside of that system, the US dollar reserve system, is Bitcoin.
Mm.
Because it doesn't matter what the Fed does. Maybe over the short term, Bitcoin will fluctuate based on those, but over the long term, it's expected to totally diverge from the system as the only asset that sits outside it, that doesn't matter what they do within the US dollar reserve system. It can't really affect Bitcoin as a protocol, the mining of Bitcoin, and all that kind of stuff.
So, as you were discussing the comparison between gold and Bitcoin, we mentioned mobility and we mentioned scarcity. So, we established already that Bitcoin is way more mobile than
Yeah.
gold. You cannot just travel with bars of gold. I would encourage anyone just try it. Just go to the
Exactly. You
airport
should
and
try
have
it.
a few bars of Bitcoin of gold with you and travel. But yeah, good luck there. So this is the first one, the mobility, and then the second one, which is the scarcity. And we mentioned that gold increases from 1 to 2% every year, which is something that we refer back to, which is called to, I don't want to go into it, but it's called the stock to flow.
Yes.
So it's basically compares how much is coming into the market versus how much is in there.
Mhm.
And the lower the number of what's coming in, the higher the scarcity
Mm.
of the asset, regardless of what asset it is. So gold is very scarce in a sense that only 1 or 2% extra comes in every year. But Bitcoin is even more scarce because this number is even less. I think now it's like 0.7%.
Yeah, exactly. 0.65,
Yeah.
0.7%. Yeah.
And every 4 years, this number goes even lower. This percentage goes even lower. And by 2140, when the Bitcoin out there reaches 21 million, this number goes to zero. So
100%.
we discussed mobility scarcity. The other thing you mentioned is decentralization. And decentralization, I think it's also worth mentioning and comparing Bitcoin to other cryptocurrencies
Mm.
because this what makes Bitcoin really the peak or the master above all other cryptocurrencies. Which there is another word for them. I cannot say it now in the podcast. Uh,
You can use altcoins.
yeah, as coins. But let's a little bit just expand on that, on the decentralization and why decentralization is important, and the difference between and why other coins or cryptocurrencies are not decentralized like Bitcoin.
Yeah, so that's a good point. A lot of people look at the new shiny trendy thing, and most of the time it's driven by marketing and venture funding. So they get to be really loud and they say we're decentralized, but the reality is the only decentralized network out of all the other cryptocurrencies is Bitcoin. Because the way Bitcoin was created, one, no one knows who its founder is. How the code is maintained also is decentralized, and not one person that maintains the code can change the code. There is consensus that is required. On top of that, it uses a mechanism, a consensus mechanism called proof of work, which is extremely difficult to break and intensive in computing power and energy requirements. Most of the other digital currencies use something called proof of stake, which is basically the banking system 2.0, where if you have money, you have authority over the network. On Bitcoin, doesn't matter how many Bitcoin you have the same level of control over the network with 10,000 coins or zero point 0.1 coins. So you having Bitcoin can't change the network versus in other digital assets, you having that, depending on their consensus model, especially proof of stake, you can dictate what gets validated or what doesn't. Because with ETH, you have to stake ETH, 32 ETH, which is like, I don't know, $90,000. So now you're a validator. So anyone who has money, the more money you have, the more voting power you have on the network. That's not really decentralized because not everyone has 32 or $90,000 to put on a node, right? On top of that, all of the others have a foundation behind them and have a figure at the top. When you have a figure at the top, you become easily a target, whether through malicious activity, threats, and influence, because at the end of the day, money corrupts. And when you are a leader within the ecosystem in these digital assets, basically you're centralizing control. Basically, whatever you say on Twitter affects the price of that asset. So there's a lot of room for manipulation. Versus Bitcoin, no one controls the code really. It's open source. Everyone can vet the code. A lot of the other projects, it's difficult to vet the code. They're overly complex for no reason. So when we say decentralized, really the only purely decentralized network is Bitcoin. Everything else is a question mark, and most likely not, because Similar to how blockchain is hype driven, saying something is decentralized will increase adoption. Doesn't
Mm.
mean it's decentralized. And not everyone has the technical capacity or knowledge to cipher through 40 pages of white paper or understand how protocols work. So I'd be very mindful at what you are being promised. A lot of it's pushed by pump and dump schemes, right? And we've witnessed that. Most other projects have promised the world, but we've yet to see an actual value adding.
Very little utility.
The only ones are stablecoins.
Mm.
Really, just think about it.
Yeah.
The only kind of the tokenization of sovereign debt, basically, which is what Tether and USDC are doing. That's the first implementation of tokenization, and that's
Mm.
the only one that has found real use case.
Mm.
Just look at the crypto market. Bitcoin right now is 65% of the entire crypto market. If you take out stable coins from the market cap, Bitcoin represents 72, 74% of the entire crypto market.
Wow.
And that's one asset out of 15, 20 million. Who is any of us to be able to decipher which one of those 20 million is the next big thing? So I'd be very mindful as a treasurer, as an investor, when looking at other coins to not get dragged down by the decentralized narrative or the uh, where we're different narrative.
Let's ask this question. Just humor. I know the answer for this one, but just to humor the idea. Why can't I just create another Bitcoin? I mean, yeah.
So the problem is you could. It's very easy to create. The code is there. You can, and many versions of Bitcoin, due to hard forks, came about. None of them were successful. So it happened organically. It started off as a small group on a mailing list that were tech geeks and that just installed the software and started syncing to the network. And they started using Bitcoin just for fun. Bitcoin had no value back then. And then people started realizing that there might be something in this. And over time, the adoption was so smooth, so much computer power entered into the network that there is an incentive to stay in this network. If you wanted to create another Bitcoin using the same protocol, well, you would have to convince everyone to use their computer power on your version of Bitcoin. Good luck doing that.
And forsake what they are getting on the current version.
Exactly. And
that already has a lot of value.
Exactly. After a certain time, network effects. Why is it so hard for people to leave Facebook to a new social media platform or leave Twitter for a new social media platform? Because there's so much value in it now and you're so plugged in and it just grows exponentially over time. So network effects isn't something you can replicate. That's why you have unicorns within the tech space, like social media, like Twitter, like Facebook, like Instagram, all that, because it becomes you're invested going to another platform, going to find your friends, convincing your friends to use the platform. Try it with WhatsApp and Signal. Most everyone I know is on WhatsApp. I like Signal more. Well, try to convince everyone in your circle to use Signal. It's almost impossible.
Mm.
So network effects is, in my opinion, one of the main determinants of why Bitcoin cannot be replicated. Reach a point of no return, basically.
I think it's a valid comparison when you compare a Bitcoin network with the Facebook or WhatsApp, but it's not fair comparison in the sense at the end of the day, Facebook is owned by someone who can just
Yeah.
it's centralized. So they can change the
100%.
rules around what you can post, what you cannot post. They can control you, but in Bitcoin, no one controls you.
No.
No one has control over what you move on the blockchain. No one can stop a transaction and say,
Yeah.
you know what, we're not going to approve this transaction unless it's a fraud transaction, meaning I'm trying to send to Rolf some bitcoins that I don't own, then no one will approve it. It will not go through.
Exactly. It's just to prove the point that because it's the easiest way to explain what network effects are. When something goes viral and after a certain point, it's a force of gravity, and it's hard to detach from it just because humans are lazy as well, and Bitcoin has accumulated so much value that people are incentivized to stay within the network. And nothing can do what it does, right? Like maintaining decentralization, censorship resistance, permissionless. You can connect out, and it just syncs automatically. There's copies all over the world. It has the highest node count, so it's really decentralized and robust.
Mm. Okay, so I think we've established not a complete, but a because to go a complete understanding of what's Bitcoin on one episode, this would take ages. It would take hours and hours. But we established a good foundation, and then we can now, I think, we can move to institutions' adoption to Bitcoin. I have a very interesting statistic here. In the last decade, institution adoption of Bitcoin, meaning institutions buying Bitcoin, has increased 924%.
Wow.
In 2020, it was just MicroStrategy, Tesla, and a bunch of other companies, which and the collective ownership of all of them was a little under 1 million Bitcoin. As of today, 2025, the institutional adoption of Bitcoin, they own over 6 million Bitcoins. Now multiply that by $109,000. So let's go through some of the reasons why this increase in institutional adoption have been in the last few, let's say 5 years, not just decade,
Mhm.
uh, for Bitcoin, sorry.
Yeah, so it's something that everyone was waiting on within the Bitcoin community. It's inevitable. Everyone saw that at some point institutions were going to adopt Bitcoin. Why would they adopt Bitcoin? Just thinking about a pension plan, an endowment, institutional investors that have large capital to invest on behalf of employees or whoever their stakeholders are. Well, with interest rates in the past being so low, everyone is looking to generate some form of return. I mean, the S&P 500 is a mirror replication of inflation, what I like to call real inflation, because money gets printed, the S&P goes up. Money's taken out of the system, the S&P goes down. So it was difficult to outperform, and Bitcoin, given it's the best performing asset outside of nowadays MicroStrategy, let's just stick to an asset, uh, was kind of a solution for them, and it wasn't something that they would go all in on. Any institutional investor thinks from a portfolio allocation point of view, similar to treasurers, right? They have to look at the overall holistic view of their portfolio and allocate based on that and their risk profile and their liquidity needs. That's the same thing with pension plans because they have to pay out pensioners. So they have to match their assets and liability. And it gets really complex. But it was found that no matter how you ran the numbers, 1% allocation, 2% allocation, 3% allocation, you quickly realize that Bitcoin dramatically improves risk adjusted returns. From a financial point of view, it just made sense to get just a little bit. So it increases returns without increasing risk in the same proportion. And they can get creative. So they don't have to just hold it and it then becomes a 10% allocation. So a lot of strategies started coming about where they could harvest that volatility, rebalance back to 3%. When Bitcoin goes down, they buy more Bitcoin. And then if it goes up, they sell to bring it back to 3%. So they're hard. So it's like generating yield in some form of way. So another thing that institutions, I mean, everyone likes innovative products and innovative things that are not tech plays because Bitcoin has a place in a portfolio. It could be viewed as an alternative asset or it can view it as a commodity. So if you're allocating 1 to 2% to commodities, well, you can carve out a little bit of that and add Bitcoin. So you add more diversification to your commodity segment, but also increase risk adjusted returns. Because what if it gets, there's the reputational risk of not looking into it and then missing out and underperforming others who have looked into it, allocated, and have found success. So I think we saw a major shift in the social. At first, no one wanted to touch it because it's like, no, I'm not going to put my reputation on the line as the CFO or the CIO and have this in our portfolios. Now it's changed to the other side. It's like, oh my God, if I don't look at this and it keeps doing what it's doing, my reputation's on the line. So it's flipped. And I think a lot of factors pushed institutions to shift in that regard. MicroStrategy being one of the huge players in this space, but also politically. From a regulatory point of view, the USA has made a major shift. Now there's single vote issuers that are Bitcoiners that are well capitalized and are implementing change to policies. Accounting rules are starting to change as well. So even the Bitcoin curious at this institution started to have leverage to go to their bosses or to their CFOs and, you know, ask them like, we should look into this. And when you look at it and you look at the numbers, you know how it works. It's very difficult to just say no, right? So I think that risk of FOMO and missing out, just because you decided I don't want to do due diligence, no one's asking you to allocate. It's just study it and then make a decision. That's the first step. And most of the people, either they study it and allocate, or they keep it on their kind of checklist of let's review next year and see how things are, how things have developed from a regulatory, etc. So we're starting to see that come in, and now it's like peak Bitcoin institutional adoption, right? Every day you see companies add Bitcoin to their balance sheet. So I think those are it's really also psychological from a human nature point of view. And a lot of the issues that stop them from participating, ESG. Well, for some reason, we've seen ESG now in a decline all over the world. The US has done a 180 shift on ESG. They want to drill oil because the reality is, we need energy to evolve as a species. So it's getting lighter and lighter, this focus on, oh, Bitcoin's bad for the environment. Because if you look at the numbers, actually, Bitcoin is the greenest industry. Over 55% of Bitcoin mining is done with sustainable energy. It is actually the greenest industry in the world. So you take that away, you start debunking certain components. Oh, it's a scam. Next year's going to blow up. Okay, well, it didn't. It kept going up. More people are buying. We see adoption curves increase. We see utility. We see government officials talk about it. We see companies like MicroStrategy, MetaPlanet adopt it. You start to question yourself, maybe I was wrong. And I think that's what's shifting us in this direction where they have to look into it.
I just sorry to interrupt you, but
No.
I just when you mentioned the usage of energy to mine Bitcoin, this, in my opinion, because I get a lot of questions. Okay, what's the utility of Bitcoin? One of utility, Bitcoin has multiple utilities. Being one is being money, but the other one for me is being able to move energy across time
Yeah.
and space.
Yeah.
Energy, because let's say you have a rural area or a place where there is a source of energy, clean energy, green energy, which is very hard for you to send generators or companies there. It's a very isolated place to get the energy and benefit from it. What miners can come in and do as they mine Bitcoin using this energy, you're basically storing this energy, this green energy, isolated energy, into Bitcoin coins, and you transfer it to where you can use it because now you have value, you have it stored in value. So for me, this is one of the utilities that you can use Bitcoin for. So it's actually a pro to ESG and to pro to
And
energy.
take it one step further. Most of these energy sources you're talking about, so Bitcoin miners, one of the biggest variables in their whole business model is the cost of energy. No one is going to set up mining rigs in urban city where the cost of energies are high. It's just not feasible. They'll go bankrupt right off the bat. So they're really good at finding remote areas where there's like a hydro source of power that no one is using and that cannot be connected to the grid. Because to connect it to the grid in rural areas, the problem is you need financing and you need 10, 15 years, 20 years maybe to be able to connect that source of energy to provide power to the grid. And so getting those approvals and a lot of those projects, they run out of money, and then it never happens. So what Bitcoin miners can do, they can subsidize those projects. If you are a municipality and you have that energy source, it's just sitting there. You can't monetize it because you need money to connect it to the grid. So the Bitcoin miners will take it off your hand. They'll pay you to mine Bitcoin using that energy source. In paying you, they are subsidizing the creation of a energy grid that can be connected to rural areas. So that's not just good for the environment, it's good for society, because that's how you solve Africa's problem. And
Y-
that's what's happening
Basically,
actually.
you tapped access to energy sources that was not previously accessible
Yeah,
using Bitcoin
yeah,
and Bitcoin miners.
100%. So yeah, and I think once a lot of these myths have been debunked, institutions started to feel more comfortable, because what matters for institutions, like, yeah, is this going to be around in 5 years? Is the government going to ban it? Is the ESG movement going to abolish Bitcoin mining across the world? And once those myths started to be debunked, and the answer is like, yeah, it's going to be around. It seems like it's not going anywhere. It's getting stronger. Seems like it's actually good for the environment in a lot of ways and good for society. Then there's less fear to look into it and to get your feet wet with getting off zero. So not everyone's going to go like Michael Saylor and basically leverage and mortgage everything to buy Bitcoin, but we'll get to that, I'm sure. It's
Yeah,
like,
I mean this is the next point. We're not advising companies at the moment to do like Michael Saylor, but let's now discuss and explore. Okay, if I'm an institution, I want to, like you said, get my feet wet and get into a Bitcoin. What are the outlets there for me, or what are the options there for me to get exposed to Bitcoin?
yeah, so this is a bit of a controversial topic. I do have some views on how things are. So there's MicroStrategy, MetaPlanet, Semler Scientific, and a few others that are well known. These started off as a business, and now they're transforming into Bitcoin holding companies where they create Bitcoin financial products. Their whole existence has become to accumulate the most Bitcoin possible and to give their investors more Bitcoin per share. Uh, we'll put that on the side. There's other companies that are looking to protect their purchasing power. And yes, Bitcoin is volatile. So you have to really figure out how much to allocate, how much you can withstand when it corrects 60% on average. So those companies might view Bitcoin as just like, it will help us extend our capital stack over the long. We will just park money from free cash flow into Bitcoin as a savings vehicle. So we could put in treasuries and we can put some in Bitcoin. And over the years, we hope that Bitcoin keeps doing what it's doing and it will extend our lifespan and protect our purchasing power as a company. So those are the two extremes. One is more like still focus on the business. The other is a business, but that is becoming a Bitcoin holding company. So not to say one is better than the other, but each one has a different way or approach. So a lot of these companies, they might not be able to buy spot Bitcoin, depending on which jurisdiction you are in. So you can't just go buy from Coinbase and hold it with a custodian as spot Bitcoin. Some of them, they need financial products. So not all companies or treasurers have the capacity to buy equity. So for example, you can't buy MicroStrategy. So it's really depending on the regulatory landscape you are in, how you buy Bitcoin. Most of them will work with a qualified custodian, and they will provide them with the liquidity and they will hold the Bitcoin on their behalf. But there are new models coming out that facilitate a bit more control on their side, where self custody, I don't think that's going to be a thing for corporations. It's just too much responsibility and corporate governance issues. But I think there are a variety of instruments. So there's the ETFs, there's spot Bitcoin, and then there's derivatives like equity form of Bitcoin exposure. Like, why do these companies exist? I'll give you a quick example. MetaPlanet. It's based in Japan. I think in Japan they charge like 50% on Bitcoin, like a tax or something like that. So, and a lot of people may not have access to Bitcoin, right? And the Japanese situation is interest rates are so low, right? All the time. And so there's a thirst for yield. They're looking to generate return better than what they currently have available in their jurisdiction. So MetaPlanet, which went full on Bitcoin like MicroStrategy, their whole purpose now is to become a Bitcoin holding company. provided investors through the equity market indirect exposure to Bitcoin. And that played out really well for them because the investors look at them and are like, we want Bitcoin, but we can't do it like everyone else in the world. This is the best and the closest thing we have to get pure exposure to Bitcoin. Not pure, but like a derivative type of exposure. And MetaPlanet is really outperforming, sometimes more than Bitcoin. Why? Because it's leverage, right? So they go, they take that, and their goal is to not dilute the shareholders. So they try to get creative financial engineering how to do that. But I think there's no clear cut way to get exposure as a treasurer to Bitcoin. It really depends on, first of all, your mandate, what you're allowed to invest in, what you're not. So there's a lot of things that need to happen before the company can invest in Bitcoin. You probably have to go to your board of directors and get a bunch of approvals. You have to communicate to your shareholders to make sure, like, we're not blowing this company up. We're taking a cautious approach. And I think how you hold it also, what you're allowed and what format to hold it.
You mentioned ETFs. I think this is one of the things that I think it's accessible here also in UAE, right?
Yes, if I'm not mistaken, there's a variety of brokers that give you access to the Bitcoin ETFs.
Okay. And we will discuss later on how maybe OnRamp can support on that. But before we move into that, okay, let's say me as an institution, let's say I'm an institution that is not in the business of Bitcoin, but I'm in the business of whatever, agriculture,
Mm-hmm.
constructions, FMCG or whatever. And I want to have some exposure to the Bitcoin. I can do that through, as you mentioned, ETFs, derivatives, buying stocks in a company that has
Mm-hmm.
exposure to Bitcoin and have leverage on that. What I need to do is decide with my board of directors and my shareholders what's the level of risk I'm willing to take and how I'm going to manage my portfolio and my exposure to Bitcoin, how I'm going to rebalance. So if we agree we're going to convert 5% of our treasury or our cash to Bitcoin,
Mm-hmm.
okay, how we're going to manage the risk around that and how we're going to rebalance that. But what other challenges that we're going to face, let's say in terms of regulations, in
Mm.
terms of reporting, in terms of that?
Yeah. So one thing you forgot to mention is spot Bitcoin, and that is the most suitable way to buy Bitcoin at the treasury level because you get all the benefits, liquidity benefits. Like if you hold in a indirect exposure format, like an ETF, well, the market is closed
Mm.
when you maybe need the money.
Mm. It's
Equities
not
are
24
closed.
7
Exactly.
like holding the actual Bitcoin.
Exactly.
But holding the actual Bitcoin will then give you the risk of the custody because
Yes.
then you have to choose, okay, am I going to be my own custodian?
Mhm.
Am I going to give the directors the keys to the wallets?
Yes.
Or am I going to get a company to be my custody company and they will hold the Bitcoin for me?
Exactly. So it's trade offs.
Mm.
So you have to do a lot of work and get advice, basically, because there is an educational process. So you mentioned governance. So of course there needs to be a set protocol on how the purchases happen, who's a signatory to place those trades. So I think if you decide to buy Bitcoin, you have to, on your balance sheet, you have to start from the top and move your way down. Uh, a lot of it can, if you decide to go the more extreme route, support the stock price if you're a publicly listed company, because there's so much hype around it. And a lot of Bitcoin investors right now, their choices of major Bitcoin holding companies are limited and limited in geographical areas. So let's say a UAE company buys Bitcoin on its balance sheet. Now that's an extra option for investors, global investors, to be like, okay, I have a portfolio of Bitcoin holding companies. Now I can diversify geographically further, right? So
Mm.
also, when you invest in these companies, you have to. No one knows what the future holds, what type of regulation will come out, whether it's positive for them, negative for them. So that's also a risk factor you have to take into account if you're getting indirect exposure. Similar applies to holding Bitcoin spot, but those are companies at the end of the day. You're still, there's so many layers of trust. Even BlackRock's ETF, if you look at the filings, there's a disclosure at the bottom. So BlackRock uses Coinbase Prime, right, as their
As
custodian.
custody, yeah.
there's a risk in that because 80% of all the major ETFs are held by a single custodian, which is Coinbase Prime. There's huge centralization risk under Coinbase. And in the disclosures, if you don't go through these details, you'll quickly notice that investing in the ETF, because it's the first time it's a Bitcoin ETF, there's actual language that says that you might be considered as an unsecured creditor. Basically, in the event of Coinbase Prime fails, they might take your assets as part of their bankruptcy proceeding, and you might not get anything. So these are risks that people just ignore because they're like, oh, it's BlackRock. Yeah, but is it really BlackRock? It's Coinbase that's holding your asset. People thought the same thing about FTX. It's FTX. What could go wrong? And look at what happened. And this is an asset that has a finite supply.
Mm.
If they give you back in dollars, but Bitcoin went up 10x, are you made whole? No, because you weren't made whole in Bitcoin. You were made whole in fiat that has depreciated against Bitcoin. But getting back to the subject, so yeah, so a lot of things to factor in. It's not you wake up one day and I'm going to buy Bitcoin for my treasury. There's a whole process that you have to go through. Getting your board approval. How do you do that? Well, there's an educational process that needs to happen. Same way how you can spend 2 years trying to convince someone like my dad to get into Bitcoin. Well, are you going to spend 2 years convincing your board? And you may not have the expertise to show them what they need for it to click. So you start there, and then you have to kind of share that across the entire organization. You want everyone to be comfortable that you are moving forward. It also depends on how much ownership you have of the company. Do you have full control, or do you have shareholders that you need to, get consensus on? Then you would have to actually study your company. Like you said, there are certain valuation modes that are different because it's not a traditional asset. So you can't, there's no discounted cash flow and all that. So you have to look at your company's valuation, where it currently stands, how much leeway you can take with Bitcoin's, you have to factor in Bitcoin's volatility, basically. So there's a lot of work that done in terms of the modeling to make sure that you get your allocation right. And it has to be an allocation that you know is something that you can live with, because the goal is within your treasury allocation. Bitcoin is the long term in comparison to treasuries, right? So yes, it's liquid, but when you need its liquidity, it might not be the right time to sell if it's in a bear market. This is for capital preservation, is how you have to view it. And it's the same for family offices. They're holding it 20 years, 15 years. It will help your company last longer. On average, companies last 15 years in the United States. And most companies fail by year 15. But if they had Bitcoin on their balance sheet and Bitcoin kept growing over those years, then it might push the average age of survival to 20 years because they have a asset that's growing in value over time, right? Versus treasuries, basically they're a melting ice cube.
And what should we consider in terms of regulations and
Yeah,
external audit as well when we're
everything.
doing
Yeah.
that? And sorry, there's one also thing I would also love to, if you can highlight on that, maybe not a lot of people who are aware about around Bitcoin's aspect, that there has been a change in the accounting treatment for Bitcoin in
Mm,
2024. And this is also one thing that you need to take into consideration. So previously, before 2024, and you can correct me if I'm wrong, before 2024, Bitcoin was used to be treated as an intangible asset, meaning that if the price go down, you need to value down the asset,
yeah.
right? But if it goes up, you're stuck.
Yeah.
That's it. Whatever you lost, you've lost. But now, after 2024, it's fair value valuation.
Yes.
So if it goes up, you can profit from the gains. If it goes down, you get the losses. But you need to be aware of the tax impact on that if
Yeah.
you're being taxed on unrealized gains.
Yeah, so that was a major turning point for corporations. A lot of them were kind of on the sidelines and waiting for this regulation to kick in, because the word, not everyone is MicroStrategy or Michael Sarah. Not everyone wants to mark down Bitcoin and then have that drag your balance sheet until the rule changes. Because if you don't have a strong balance sheet or a strong business, that could destroy you. So yes, that is a huge change in how things are. But from a regulatory point of view, I mean, I'm not a corporate lawyer, but every jurisdiction is different. Like in the GCC, yes, there's a lot of forward-thinking countries like the UAE, Bahrain. And the advantage here is that there's more clear cut regulation about digital assets. Now, I think the UAE took a different approach than Bahrain per se, where they created a distinction between digital assets and traditional assets, like a wall in the middle. And to be able to hold digital assets, you need a different license than to actually hold traditional assets. So that creates a bit of friction for Bitcoin companies, for Bitcoin treasury company. And Bahrain's a bit different. In Bahrain, it's more broad in terms of regulation. They haven't delineated it like that. So there is a company. The first publicly listed company in the entire GCC is actually a Bahraini company, Al Abraj Restaurant Group. And they have now 7 Bitcoin on their balance sheet. And they're not huge, but 7 Bitcoin is still significant. And they want to increase that allocation. So depends. Japan has different regulation. The US has different. Europe is much stricter. So it's not something that can be done just on a whim. You need advice on the legal side, whether you can do it. And then how do I do it? Where do I source the liquidity? Where do I hold the Bitcoin? The different models to custody the Bitcoin. How do you track every single purchase, transaction, audits, record keeping? Because in some countries, I feel you add Bitcoin to your balance sheet, you're basically asking not for trouble, but it's like you'll be more scrutinized, right? Because there's a lot of old guard people that will wait for one of these companies to go belly up and then be like, I told you so. So I think, a measured approach with some guidance on the legal side and, Bitcoin expertise on the other side can get you to a spot where you won't hear that from anyone, right? Because you need to really be prepared. Like, I'm sure Michael Saylor gets a million calls per day about what's happening, what they're doing, but the US is more of the Wild West. Europe and the GCC regulation is more firm and strict. You can't just break and fix later. Like, if there's a rule and if the rule doesn't cover what you're doing, you can't just try it and then find out how to fix it later. No, you go to the
You will
regular.
find out.
You'll find out
You
in a
will
very
find out.
different. So here the approach is, I'm not sure. Let's engage with the regulator and have a conversation, and then they can tell me if it's okay or not, which is really good. In the US, the rule is there, then we can't change it anymore. Here, there's this from my experience at least, they're very open to new ideas to better the regulation. So yeah, lots to take into account. It's nothing straightforward.
Okay, I think the last question that I have is how can OnRamp support on that? If I'm an institution, let's say I'm in GCC here in UAE and I want to get some exposure to Bitcoin,
Yeah.
I approach you. How can you help me?
So we do standard consultancy work. So think of us as a Mercer or Aon, but specializing in Bitcoin. We're all ex-Trade 5 people, asset management, investment consultants, and so you wouldn't notice a difference in dealing with us in that sense. We're not going to come like Bitcoin cypherpunks and oh yeah, go all in on Bitcoin. Risk is really top of mind for us. So we can support companies depending on where they are. Some companies may already have Bitcoin or have Bitcoiners at the leadership level, but they need support in communicating their roadmap and plan to the market. So we can facilitate those communication, those outreach. We can help them build a narrative to, for example, raise capital to buy more Bitcoin. If it's a company that just wants to park excess free cash flow, which a lot of companies, they don't want to be Bitcoin companies. They want to be their company, but have an allocation to Bitcoin. So these we would help them in figuring out like where they stand from a valuation point of view, and we would help them understand the risks and give them an idea on what's suitable for them to allocate. On top of that, we go further. We walk them through every custody model there is, explaining to them based on their needs, because some of them might have liquidity needs. One custody model might not be suitable for them. Maybe they're like, oh, we don't want to hold it long term. Maybe, when we need to, we want to sell some if it goes up and then put that in treasuries, like harvest Bitcoin's volatility. So some models of custody, for example, are much slower than others. So we help them build a whole Bitcoin integration plan from the top up and governance and controls to figure out how the signing of the transaction were to happen, how to sell. So really it's like a white glove type of service. So governance, getting the exposure, how to buy it, and how to safely store the asset. So all those three components. On top of that, the communication aspect and the narrative, if they want to go big and like become a Bitcoin holding company, basically, like
Mm.
similar to MetaPlanet, MicroStrategy, there is a playbook, but each company is different, and each company, if you're a IT education company, you can't have the same playbook as a restaurant group. You have to align your messaging with that. So we help them with all of that. So
Yeah, at the
that's
end of the day, it's based on the goal of the business
yeah.
itself.
So it's really
What's your mission? What's your
you
vision?
got it. And the idea is it's not enough to be like, okay, I'm just gonna buy Bitcoin and then that's it. You need to have a full understanding of the roadmap. Like, what is your goal? Is it to accumulate more Bitcoin? We can help you figure out how to do that. Is it to raise money to buy more Bitcoin? Or is it because you think if you integrate Bitcoin through payments or through just being a Bitcoin treasury, that you will get more clout and more marketing and more branding, right? All these may have value to certain companies, and we provide advice on kind of what we think they should do.
Great. Thank you, Rolf,
Hey, it's a
for being
pleasure.
my guest today. I think it was a really, really exciting discussion, really interesting for me. I love it. Maybe because I'm a Bitcoin maxi, but but I hope everyone who has watched this and all our audience would love it as well.
Oh,
Thanks again for
hey.
coming and joining me.
Yeah.
Really appreciate it.
Oh, thank you so much for having me. I had a blast talking about this stuff with you. Sorry, sometimes I just ramble on. It's
But
Bitcoin.
that's what
I'm
we do.
super passionate, but
Yeah.
I really appreciate it. Really
I
enjoyed
told you,
it.
I'm just Thank you, bro.
Thanks a lot, man.
Okay,
Thank
thank
you.
you.